So thank you, everyone. It's a great pleasure to be with you today to just share some of our perspectives around all the exciting things that's going on with the cross-border transactions with Chinese biopharmas and the international markets. First of all, just a brief introduction. Hopefully, all of you do know L.E.K. We're a global consulting firm with life sciences and healthcare being our single largest practice. And clearly here, we're all around the world. I'm Helen Chen. I'm based in Shanghai and Hong Kong, heading up our Asia healthcare practice. And while we are not really a report publisher, we have put some of our IPs and proprietary research in our website and share some of that. So hopefully all of you will enjoy, whether talking about precision medicine, talking about hospital priority China, or the exciting things that's happening in clinical trials. And that's me here. So on today's topic, right? So I think all of you have seen in the business press, whether that's the Wall Street Journal or Financial Times or Bloomberg or any of the analyst reports, as well as the typical healthcare and life sciences news, that there is a significant amount of interactions around and discussion around the Chinese innovation coming out. And this is now a very, very big part of our global conversation. And what we're seeing is that the transactions announced coming out of China, really, at the end of 2025 was hitting around $100 billion a year. And that green bar, right, that ramp up is just really, I don't think we could have imagined it even a few years ago. So this is really why I think the whole industry has taken notice. We need to recognize that even though it seems like on the global front, has just recently popped up, but we need to recognize this has been 2 decades in the making. The Chinese government has been emphasizing biotechnology and innovation through multiple planning periods. And we can see even with the companies that's in the marketplace, the type of innovation and what they're bringing to China and to the world have expanded. And there are also statistics that describes the innovative drugs that's being sort of launched and being developed in China elsewhere. And we can see that China today is already accounting for about 30% of the global innovation, second only to that of the US, and is essentially at or ahead of Europe now. So again, definitely worth consideration. So we did a research and survey of Chinese biopharmas as part of our China trials report last year, second half of last year. And you can see that on the left-hand side here, 44% of the companies have already started conducting clinical trials outside of China. And then another 40% or so are willing to conduct trials outside of China. So really Chinese companies are actively thinking about bringing assets internationally. And on the right-hand side, vast majority of these are intending to do it for co-development and co-commercialization or just pure out-licensing, really opening up a lot of opportunities for European companies to pick up these assets for the global market or for the European market. Those who intend to commercialize on their own is still a relatively small percentage. Only a quarter of the companies have that intention. So thus allowing the companies already based in Europe, in the US, to take advantage of these assets for commercialization. And these could be smaller companies as well, and not necessarily just the big pharmas of the world. Again, the reasons to prioritize drugs for clinical development. On the left-hand side, you see this is the multinational reasons, right? Clinical differentiation, market potential, and so on. The Chinese companies do see that slightly differently. So specifically, strong licensing out for international market potential jumps up to a one of the key reasons to do so. And from actual statistics around number of the global licensing deals, from 2020 to 2024, we can see essentially a tripling of that across a wide variety of modalities. Um, Small molecule, mAbs, bispecifics, all ADCs, all very active, and then across a wide range of therapeutic areas. Not surprisingly, oncology and I are sort of the leading areas, but also some of the larger, broader therapeutic areas like cardiometabolics and infectious diseases. And then increasingly, not only are the assets in the late stage, but also some of these deals are moving towards the earlier stage preclinical assets. Uh, we're at an oncology conference today, so illustrating some of the oncology examples. A number of these are ADCs, a number of these are in our earlier stages. The ones highlighted in blue are those in IND or phase one. The ones in white are the later stages. And you can see the upfronts as well as the total deal value have quite a wide range, right? Some of it's just tens of millions up to the very significant Pfizer 3S Bio deal with over $1 billion in the upfront. In addition to the licensing deals, you might have also heard about a new code deal, right? So this is a case where it is not a pharmaceutical company licensing the asset directly, but rather we have financial sponsors carving out the assets of ex China usually to create a new company, in which case they then help shape and develop this company until a stage where the financial investor can exit. That can be a multinational acquisition, similar to the really quite one of the first famous cases that put Nuco on the map. This wasn't the first, but certainly was the one that I think everyone stood up and took notice, where Hengrei's a number of assets from Hengrui in respiratory was taken out to create Iolos Bio. Atlas Venture, Bain Capital, a number of the other investors put that together, and then which was then acquired by GSK just 6 months later. So that really has put this whole business model on the map, and now increasingly we're seeing a range of the deals, just a few illustrated here for that, and increasingly larger deal sizes in a range of therapeutic areas, and then more are being set up on a day-to-day basis. Based on L.E.K's discussion with companies, I think there's a strong preference to work with another strategic, so that there is um, a collaboration there rather than going with the financial sponsor. But certainly, I think companies are willing to take a financial sponsor deal as well. We also looked at the top 15 multinationals by deal ranking with Chinese in China. So this is about 160 transactions over a 5.5 year period from 2020 to 25. Um, so we're seeing increasingly, it's not just a pure asset transaction, but there's also technology and IP collaboration, injection of some technology to be co-developed in some way. Earlier stage assets, we described that as increasing. We saw the stats overall, and that's true for the larger pharmaceutical companies as well. Looking at preclinical and phase one assets, nearly half of them have some involvement around that. We're seeing that number three, about a third of the companies, about a third of the transactions are actually repeat deals with the same companies. Certainly, that makes it easier from an alliance management perspective, understanding each other, and so on. Now, that doesn't mean that you've never done a deal, you couldn't do a deal, right? There's still two-thirds of which are one-offs, but certainly means that once you're in, the sort of the next transaction is easier. And then also we see about a fifth of the deals are actually in multiple steps with phases. So, for example, in the German Merck's deal with Abisco for pimicotinib for rare oncology, the initial deal was for just the China rights of the asset, and then and then pending phase three readout. Merck then did take rest of the world rights, so that was a two-step deal. The Pfizer 3S Bio bispecific for PD-1 VEGF deal also has a number of options in there, including an option to consider China co-commercialization. So again, these are now right beginning to show up in some of these deals in order to facilitate both parties' desire to participate. And then now we're getting to some of, less seen, but still emerging trends around payment diversification. So things are moving from purely sort of a milestone royalty sort of the basis to equity investments or share cost, share profits, so that there is a longer term participation by both parties in that. And then also from the buyer perspective, it moves things out from P&L into the balance sheet, which sometimes is helpful for some of the public companies in thinking about how they structure their investment. And then for the Chinese companies, it's also a validation, right? An international partner wishes to hold the stake. So both companies participate together in the success of the partnership. And then, even though we say only 23% previously that was interested in eventual commercialization, to the extent that the Chinese companies have that ambition, some of the deals do begin to provide co-promotion or other participations for Chinese companies. So collectively, right, particularly if you are not an experienced or well-known investor with China, being able to offer some of these alternative options in order to satisfy a Chinese biotech's desires to grow internationally could be a differentiator for you. So we'll leave it right as a short introduction, but perhaps just to raise some of the questions as you continue to think about your ambitions and the opportunities for China and Asia, right? Exactly what is our region to you? Is it for commercialization? Is it to accelerate clinical development? Is it a source of innovation? Are you seeking a source of capital? Right? And are BD and management and the board all aligned on these opportunities and these approaches? How do you actually access that? And then, of course, L.E.K is very willing to have the conversation and discuss how we can be supportive as you navigate your route through China and Asia. Thank you very much for your attention.